All right, guys, welcome to this class. In this class, we're going to talk about the big picture for the market. The yearly candle just closed for the entire market. So if you are a person who you're serious about the market and you have not checked yearly candles, guys, what are you doing? If you're a shareholder and you have not looked at yearly candles, guys, don't play with your money. The yearly candle will let you know what right now investments will be the ones that we rally in this years, what's doing inside moves and what's not worth touching. Okay, so we gotta start with oil just to nip the facts of oil, right? Because right now, like, you guys know that I hate being in a position and then some news hit and everybody wants to talk about it, everybody becomes experts, and I'm like, no, that's not even, like, you guys getting the facts confused. What matters is the beginning, like the stock, the history of the stock, right? So we're gonna talk about, obviously, start off with talking about what's going on in Venezuela, the U.S. This is nothing emotional. This is not personal opinions of what I think is a ethical thing or not. This is all money related. This class is no feeling, straight up money. What would the banks do? And if the banks are doing something, there's money in both, and that's for you guys to profit, right? So let's go to what just happened. So, quick history. Oil was discovered in Venezuela in 1913. This is not like very old that they have the oil. Prior to that, they were a country based on agriculture. They have a lot of resources. Cool. The companies that came in to help develop the oil were the American companies. And you guys will ask, who were the American companies? The American companies that made everything happen. Let me see. Here, we have a little picture of them, right? We're talking about Chevron, Exxon, a lot of Exxon, right? Let me see. There's more Exxon. So it's American companies along with some Europeans that help develop the infrastructure, how to process the oil, because the oil in Venezuela is not like ours. Ours is like thinner. It's easy to process. Theirs a little thicker, so it needs more processing. All right, so it's America and Europe who created those bases. What happened is that they had a change of power, and then the person who was involved, they say, yeah, we're not doing business no more, and they kept everything. All the investments were frozen. America threw sanctions on them, so a lot of money, the investments, the machinery was frozen. So that's why the theory of like they owe us money, they owe us oil, is because the investment is the ones, us, that we started that, right? So now, fast forward now, current times. Right now, we are have a hands on Venezuela. We said temporarily we're gonna run it, but we do still have claims to the oil. So Chevron, compared to Exxon left, Chevron was the one who stood in Venezuela, but they're very limited. They have a special permit from us, and they have like very limited on what they could do. It's not a full blown um, process. Exxon left. So now, along with us now going back to Venezuela, having those resources and the infrastructure, these companies will be coming back. Exxon, the left, should be coming back. Chevron, that got all the restrictions, they're gonna lift those restrictions, I'm guessing, in the future, right? Not right now. So that means more money. But all right, so how did I know this was gonna happen? I knew since October. I kind of had an idea what was gonna happen. There was talk about Venezuela. If Trump says he's gonna go for you, he's gonna go for you. Like, one thing about Trump, you guys just have to listen to the investment side. Like when he talks about the Stargate project, he talked about oil, about drilling for oil, AI. Whatever he's saying means money, guys. Aside from opinions aside, money is involved, and we need to make the money, right? All right, now that we have a history of it, let's go to how does this relate to the charts. All right, so now we have Exxon. Let's just go to yearly. This is if you're an investor for Exxon, right? How did I know things was gonna get spicy? So for a long time, I've been watching this level, the 110, right? This candle right here just closed like 5 days ago. This one is a new candle. Prior to that, this is what we had. Look, if you draw a flag, right, a trend, this is a flag that created this breakout. And in this breakout, it was not ready to fully break out. They did a flag, another flag, right, inside moves. And then the breakout will happen above the 110. So the moment, and I've been looking for this for a while. I've been trading oil for years now. This is not like I just got in it because no, I've been here for a while. And a lot of you guys who here would testify that I really do trade oil a lot. So now let's go fast forward to current times, right? We know that this is the key number. So once I got that number, that I knew that by the last day of the year, I knew that yes, we got the 110. I went heavy on oil. And then it just happens that the news hit that Venezuela, but I didn't enter because of the news. I entered because the yearly candle told me to. It told me somehow, some way, we're gonna pull higher. My level for Exxon is 150. We're going to get there. Somehow, some way, it's going to get there. Especially if they go back to Venezuela and do business over there. All right, so now we know that part, right? The yearly, that's all you have to do. You don't even have to go to the 1 minute 15. You don't need that. You just need 110 and you are good to go. All right, so now let's look at the current times. Right now, since this right here became the new yearly candle, you guys see the top of that level? That top of the level now becomes 120.30, right? So that means that let's look at price, what happened today. As long as you're 120, let's say tomorrow they say fake news, we don't got claims to oil. You could drop down all the way to 120 and this is still is bullish. This is still is bullish, okay? So Exxon above 120 is a buy. Even today when the market came down, my regular students during the close friends, I told them, guys, when it dropped here, I said this is the area to buy again. That's that. And any bounce that happens above 120, it is bullish. All right, so now we know Exxon one day we're gonna get to 150 as long as we hold the 120. For my levels, I'm using candle bodies. Yes, I don't use the wicks. I use the big time frames. I like to start. The more you zoom out, the less confusion there is, because when you are doing this like in the 4 hours, what is this? What is this? You know, it's a hot mess. So I start with the monthly and look at the monthly. It's also a hot mess. What is this? So I'm gonna zoom out as much as I need. Maybe the 2 months. Look, 2 months is looking cleaner, right? 2 months. Let's keep going to the 4 months. And that's how I know what level is bullish. That's why when I'm trading on the small time frames, I'm like, that doesn't matter. 120, it's okay. Like I said, with today's drop, what happened? Did I panic? I said that's nothing. I'm like, they could drop this even to here, and I'll be like, oh, that's cool. I'll just buy some more. Now, if they take me on the 120, I'm like, all right, 120 breaks, they're probably gonna take me to 110 again to retest the full breakout. If they ever do this, then I know that they're gonna come 110. And if they ever go to 110, you buy it out again. Let me see. You buy it out again because that's our yearly breakout. All right, that is Mr. Exxon. Let's go to CVX. That's the one that's gonna profit the most from everything that's going on. So let's just quickly go to yearly, see if we see anything. Wow, look at that. Another one. Major flag. And also when you know, okay, so Cynthia, why are you saying 150 for Exxon, right? The way you're able to know what level is gonna go to is depending to the left side how powerful the moves, right? So if Chevron is at the highest we've been was 192 with this flag, right? I know that Chevron has the capacity to go like 250, 200s. For sure the 200s, right? Why? Because look at the left. You have 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12 years of consolidation that gave you this candle. So are you gonna, it just runs this and you're done? No. This is what's gonna give you the power. Like I think of the market, the stock's like a slingshot, right? You gotta pull, the further you pull, the bigger it's gonna shoot, right? So that's exactly what the market does. So right, so this one, if we look at the yearly one, it's saying that as long as Chevron holds in this range, 117 is valid, and 179, it's not impossible for us to go to 179. Chevron will be going to 180. This 180, 179, it's gonna go there. So now let's see the 6 months. There we go. On the now obviously it started with the yearly. For my regular classes, I do more smaller time frames, obviously, because I'm actively trading. This class is more like the big picture of the stock, so you guys know what's going on in the market, right? Now in the 6 months, obviously I went ahead. This is a yearly candle, and now this is 6 months. It gets divided into two, so now I have a smaller range. Let's keep going. Let's see, 4 months. Okay. A flag starting to form. Okay, let's keep going to the 2 months. Another flag on top of a flag. All right, so let's keep going. So that means that the flag that's trying to break out from here is at the 160.56. So that means that As long as, let's say, this week and the following weeks, we're able to close above, this is super bullish. If this guy will lose this, it's not that it's bearish, it just goes back into range. Let's look at the monthly. All right, the monthly, right? We still have a long way for the monthly to close, but this is what it's trying to do. You guys see that candle? It's trying to close above it. And now, I think that if we get a monthly close, if we haven't gotten it yet, if we do get the monthly close, this has enough power to take you to 179. And that is how I hold my leaps. I'm like, all right, so how big is the squeeze to get to my target? Okay, how big is 1, 2, 3, 4, 5, 6, 7? 7 months of consolidation that is forming right under this bearish engulfing, right? This bearish engulfing, this bearish engulfing, this red candle. So this is my slingshot. It's pulling for 7 months to shoot me to 179. 179, what happens? I take my, well, not that I'm going to take my money. I take a lot of profits. I'm like, okay, the move is now complete, because once you get to the move, they do a whole lot of up and down, up and down, up and down. Depending on your expiration, you might be able to hold through the choppiness, but if you don't, you're already profits, why give it back to the market, right? All right, that's it. Like I said, today's drop was an area that, look at the drop. Look exactly where they went. That's why levels, and that's why I be like, oh, to the penny. Look, I charted this on the big time frame. You could delete this trend. On the big time frame, 160. I saw 160 recover, and I let my team know. I'm like, guys, like, here, this is your stop loss. 160 is stop loss. If we lose 160, we'll run. Fuck it, right? But as long as we're above 160, we're holding the bullishness. All right, guys, that is for Chevron. You guys know the history that this guy has business in Venezuela. It doesn't matter who's going to be the next president. We just know that they're like, okay, so we're not about to do what they did. Because prior to what's happening with us, Venezuela's oil was never going to be theirs. Prior to this whole thing with Venezuela, U.S., Russia and China had their hands on the oil. Venezuelan people never saw a dime out of this, right? So when it comes to U.S., we're going to get our hands on the oil, but they are going to get profits from those sales, right? So it's a win-win for everybody. Like I said, we're not going to talk about if it's the right thing, wrong thing. We're talking about money. Money is going to be made for the country. Money will be made for America. Money will be made for the oil companies. And money will be made for whoever's invested in these companies, all right? These are the big dogs. If you don't want to follow all of this, I'm not going to chart this one, but you could even go to the ETFs. Look at the ETF breaking out already. This is for energy. This one moves with oil too, right? All right, so that's that. Now let's go to crypto section. What is, I'm not going to go over the ETFs. I'm only going to go over stocks that I'm seeing with potential in different sectors, okay? So now let's go, because if I do ETFs, we're going to be here a while. We're going to get sidetracked. And I have a long list. I have healthcare. I have the crypto market, nuclear market, tech, healthcare again. Let me see. I have a lot. So now let's go to coin, right? So for coin, you cannot just trade coin blindly. You first got to go to Bitcoin. I like to do this one right here, Coinbase, right? So my theory is, this is my theory. If we reject from this zone right here, especially breaking the 80, crypto goes to 62. If you, regardless of what news, don't listen to news talking about like, oh, it's gonna crash. Screw them. Crypto got this high on their own. I don't know if you guys are aware. All the banks are in. The banks are in. So if it got here on its own, imagine how far we get with the banks. My target for Bitcoin is 150, and we're going to get there. Even if these people would drop Bitcoin to 62, you got a flag right here. You're going to touch a flag and bounce and go to 94. Like aggressively, right? But it's all about protecting this 80, because look at this bottom. Very strong bottom. You cannot lose it, right? So when it comes to trading coin, MSTR, you see how, let me see the monthly. Let me see the yearly. Let's go to yearly. All right. So this will be similar, right? Let me take rid of my pictures. All right, so on the yearly, also, crypto's coming from a 1, 2, 3 year breakout. Create a massive flag. Does this look bearish? I know right now people are like, what's the future for crypto? But this is telling you we're flagging. So the key level for this one is 93,703. And by no coincidence, where are we? So let's start going to the smaller time frames to understand, right? This is what scares me. This bearish engulfing showing up exactly at 94. That's the area you're gonna be careful. That's the one that tells me that if they want to go there, they could. I don't actively trade this. I only buy like the dips at the key areas. Let me see. Let me see. All right. Monthly, weekly. All right. So now we know the key level is 94. We saw it from the yearly level. And now we have a candle who fell on the 94, but is doing a whole lot of inside moves. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 candles that are dancing in here. Even today, if we zoom down to the small time frames, let's go to the 4 hours right here. You see how price struggles at 94? Look at that bearish engulfing showing up right there at the 94. But no coincidence. There's no coincidence. So this whole thing is a range. It's a range. Only if this guy is able to go above 94, that's when you like coin, MSTR, Mara, let's go. Like they had a little bounce today because this guy cleared the whole range, but that does not mean they're off the hook. I will show you guys what off the hook means, right? So yeah, this guy is in a range. That's how you know how to get excited or not get excited. Okay, we know this. Let's go to the guys coin. Beat down, right? Divergence is present. Yearly, let's go. What we putting in the yearly? How did it close? Let me just delete this real quick. All right. So now we're seeing that when IPO it dropped, and now this is the enemy right now for coin. You guys see this 258? On the yearly, we did not close above it. If we would have closed above this, I'll be super bullish. I'll be like on some crazy stuff, right? But no, we didn't. So, but it's not bearish either. It's just saying that it didn't have enough buyers to be able to clear this. So it's going to keep trying. It's going to keep on consolidating. From the range of 169 to here, this is all a valid range. It's all inside moves to build momentum to beat up the bad guy, which is 384. You need all the slingshot here to boom get here, and that's what price is doing. So let's bring back the levels. Now we should be aware what 255.61 is, right? Cool, we know that. Let's go to 4 months. Inside. Let's go to the 2 months. 2 months. And I might be dropping more souls than I have to. Like this had to be yearly. It's just I can't help it. When I see a chart, it's just I stop diving out the knowledge. Like it starts talking to me. All right. Per the weekly, let's just go straight to the weekly, right? We see. Let me see. All right. So now we see. Where's a 6 months candle? Sorry, 6 months. All right. The 6 months, we have a bearish engulfing right here. It's divided right at the level of 255. Cool. Let me go to current times. It's a little choppy. It's holding above here. Let's go to the weekly. All right. On the weekly, when stocks are about to do a little bottom, they're about to bottom out, they start doing a little dance, right? When they approaching like very critical MAs, the 50, the 200, the 100, the trend lines. The red lines stand for monthly levels, and the purple ones are weekly levels. But for the sense of this class, we're gonna focus mainly on the red ones because this is the big picture. When I do the classes, I do more like the weekly levels, a daily key level that will help me achieve my weekly, right? It's more obviously in class, it's more like for faster moves than the big picture. All right, so for Mr. Coin right here, when stocks are about to bottom out, they're about to do some type of even bounce. And the bounce doesn't necessarily mean that it's like bullish. It just means that it's starting to get so beat down and starting to hit key levels that buyers have to fight back. Let me see. Purple weekly can be higher. It's higher. She labels it. Yep. Jimmy got it right on. All right, so with coin, it's important that this is doing this, right? A whole lot of inside moves because we know that Bitcoin is fighting with 94. So we have 94. We're like, okay, above that level it goes, and this guy is doing inside moves. What these stocks like to do, they like to do a little dance of dropping new lows, but those lows get eaten up and start creating a range. And usually they start creating, when they do this, they start doing divergence. That's what they like to do. Me, when it comes to coin, I would not be a person shorting coin. I would short PLTR before I short coin, to be honest. Like I pick and choose who I will do calls on and who I don't. That way I'm able to walk away if the setup it's not. Like when I do my weekly TA, I'm like, all right, this is the stocks I will go for puts, and this one I will go for calls. Like the very beat up ones, my team knows. I'm like, I stand back. I'm like, I don't care if it goes to the floor. I'm not touching that. Because psychologically, I wouldn't be able to trade that even if it moves that way. Um, and then on the call side, I'm able to hold calls longer when I'm catching stocks from the floor. Like an upload today, I got it from the floor, so I don't have much to lose. Everything past that is bullish. All right, so this one's creating a whole a trend right here. A whole lot of trend is squeezing right here. But look, it's squeezing. So this one will be the big moves happens of breaking the range. 282 gives you 304. Right now we're here, and this is the monthly. So let's look at the daily. Now, what I will be looking for the daily, I'm looking for divergence. What is divergence? So look at the trend. Divergence means when price is doing new lows, the RSI should be doing low, right? The last low, this should be, this RSI should be higher. It should look like this, a non-divergence. Divergence should be like price goes down and RSI goes down. But that's not what's happening here. What's happening here is the price is going down and then RSI is going up. What's my little drawer? It's going up. Well, up. There we go. It's going up, right? So I know divergence is trying to cook. I'm like, okay, there's some divergence. Bitcoin is at 94. Like, I'm putting like common sense together, you know? And I'm like, this guy is fighting with here. I'm like, if I want to take a risky play, I would take it above here. That'll be risky though. If you want to take it more secure, you could take 282 to 304. Here, they're going to dump you. They're going to do a whole lot of this and that, right? Like the third target is always the hardest target. That's the one that you got to take your money because they're going to dump it. And then eventually they recover and then, you know. But I'll come back either when they take it here or they get out of here. Because I don't want to be in that chop. All right, so that is Mr. Coin. Let's talk about MSTR real quick. Now, we already know about 94, right? Same setup, right? Let's go to yearly. This is beat down. Well, not actually. Look, we're holding the last that last area of breakout, so that's good. And based on the yearly, it's telling you that the momentum is there. Although it has dropped down, the momentum is there. Let's keep zooming till we get like a good time frame that we can see things. Not much, right? The monthly is showing us something, right? We see a massive consolidation of price. And currently we're under it. So for me to say like, okay, this is looking a little bullish, right? I need this guy to get above this guy's. If this guy gets above here, all right, so I have a continuation of a flag. And then this becomes like a little wick that it created and then goes back. Then I could reclaim the range of 168 to 245. I'm not saying this is going to go sometimes. I'm only talking from range to range. So now let's go to the weekly. For the weekly, we see the same setup. Look, same setup right here. So this one, to trigger divergence, as a risky, it will be above the red. As a more confirmation, will be 200. 200 will be this, like a break of this. It'll probably do a little fake out, like it's not gonna break it, and then boom, and now you open this to this. Once you get here, run, because you're about to fight with this guys and this guys and this guys, and they're going to dump it, and they're gonna make you fight for your gains. So that is MSTR, and if you guys should be noticing that I'm giving you guys beat up stocks. Like, even when it comes to shares, you have nothing to lose. You could buy these shares and put a stop loss. Example, right? If we're not trying to be risky. Remember, Bitcoin is now 94, so it technically will be risky. Let's say that you want to buy it, let's say at 168, right? You could say, okay, stop loss at 168. What I'm gonna take no more than 158.99, right? I don't want to go past this candle right here. Then that's it. If you're wrong, it drops $10. If you're correct, you're running almost $36. And if you get out of here and then you miss this entry and now you're trying to go through this entry, no problem. 200 to 45. That's $45 point move. You could go through, do this through shares, through options, and the options not like a week thing. Like, I'm not going weekly. Like, what I teach is not for weekly. If you try to follow what I'm doing weekly, you're going to get obliterated from this market. Because a lot of the stocks that I'm doing is like them big ranges, so you have to be patient to let the move play out. This Intel took me a year for it to play out. Exxon took me a year. Oklo took me a couple weeks. So all of these guys that pay you a lot, they're not just like a you get lucky. Like it's a reason why I catch big moves. Is because I be babysitting them. Maybe when I post the games is when you guys hear about it. But when I'm in class, I'm like a broken record talking about like it's gonna go. Like that's you gotta babysit this guy. It's like set alerts, set it and forget if you don't want to get caught up in the chop. All right, so now crypto is complete. Let's go to the good stuff because the people want to know how did I know. And okay, so now that you guys understand a little more of how do I chart, y'all gonna understand. Y'all gonna scratch your head like, damn, like I get it. All right, Oklo. Let's go to Mr. Oklo. How did I know? Okay, so Oklo had an amazing year last year, right? The closing that we had, the last year's candle has been above 71.83. So that means that anything above this is bullish. All right, let's go. Okay, so now we know the key level 71.77. Cool. Let's keep going down the time frames. What do we see? 6 months, we above it. Cool. 4 months, nothing much there. 2 months. Wait, but this looks bearish. Zoom in. Is this candle smaller or bigger than this one? It's smaller. So what these people did, they retested the whole breakout candle to the floor and they got up again. And that's when I caught it. I said, what's the worst that could happen? I'm like, if I'm wrong, it breaks 69, no problem. But if I'm correct, I'm going to catch this to 132. And that's literally everything that I enter. I'm like, oh, what's the worst that could happen? Literally, and it hits. It hits. I'm telling you guys, shares makes more money than options, and I tell my students all the time. I'm like, we could do options all day, but shares. Like I have a portfolio that I show my students that back when I used to charge for classes like through Cash App, I think I left like maybe, I don't know, I probably left like $15,000 there, and then I used that. I'm like, oh, let me just buy shares of whatever I call out and just see how it goes, right? That portfolio right now is up like 45%. Year to date, so it's like shares, and this is regardless of what the market, the up and downs, you guys, Powell and the earnings, they are right. Anytime, for example, Oklo, I will buy shares from the bottom, and I make sure that I don't add more money to that account, because if I add more money, it becomes my regular account, right? So I'm like, all right, now that account's worth like 27, so now I'm like, I gotta work with that 27. I have to work with that 27 and if I want to get into another stock like an Oklo, I got to sell another one. So that's when I got to sit down and evaluate. I'm like, okay, this investment is doing good. Is it worth it to sell it for another stock, Oklo? I'm like, yeah, well, what's the worst that could happen? I'm seeing a big move. But yeah, guys, like I said, from this class, you guys could get a lot of ideas of shares. All right, so Mr. Oklo, another beat down one. We know 71.77. Cool. Let's go to current times. On the weekly, what did I tell you guys? These stocks. When these stocks are hitting key levels, look at this flag, look at the yearly. When they're hitting these key levels, they start doing that little dance that I told you guys, that they start slowing down, hitting trend, coming down, and like they start slowing down. When that start doing a whole lot of this, I know that some type of move recovery is going to come. Am I saying Oklo is going to go to some highs? I'm not saying that. I'm saying I could take Oklo confidently to 111. So I marked it here, all right? So why did I mark 76? Because now I already have my monthly levels. I have nothing else. So then I went to a last candle, and I noticed on the smaller time frames, it had divergence. So every time you have divergence, you want to get past the last week's candle if you want to start triggering, or whatever candle to your left side. You got to get above it, start triggering like the divergence. And the divergence are the ones who give you the 1,000% rallies. So here, right, everything I had to do was get above here. And what did Oklo do? Look, Oklo was here. Last week, this guy closed above here at this level, the yearly. So why wouldn't I swing calls? Why wouldn't I be bullish about this? If I'm wrong, like I said, if I'm wrong, it's nothing. It's another day, another dollar, no problem. But if I'm correct, this turn ended up turning to 650% gains. Just from here to here, right? All right, so now we are at 87, and now my job is to fight with this guy. So tomorrow, if they try to gap down Oklo, it's going to be a fight of here. This becomes now my new range. So they'll get momentum to get above 87. If I clear 87, this is the guy I'm fighting with. and I'm gonna have the power to go to 1-1. After 1-1, they're gonna dump me because look, you're gonna fight with boom, 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 boom. A lot of enemies showing up at 1-1-1, right? All right. But long story short, I need you guys to understand why this was a juicy area, why the risk to reward was here, why swinging calls, buying shares was worth it, right? And if you look to the small time frames, like, look at that move. Beautiful, right? All right, so now we have Mr. Oklo. I'll just do one nuclear. Nuclear also, remember, natural resources, AI. Like, that's why I don't understand. Everybody's hype about AI. They like to talk about it when all the fools are talking about it. But when you see a nuclear, which new AI has not changed. We still need AI. AI is still the powerful blah blah blah. You see the power that AI needs, and you see this guy here. It's like, so wait, you only like it when it's here, and when people are talking about it, but you don't like it here. Nothing has changed about the company. Still the same company. America's still gonna head AI. AI. All these tech companies are very invested in AI. Trump is talking about AI, AI. Exactly. AI needs energy. You got it, Portia. So that's what I'm trying to say. Like, when stocks are beat up, you got to get thirsty. I'm like, oh, I like that. Yeah, it's at a key level. Don't be chasing like this, guys, like this. That's why I kind of got annoyed when they were talking about, like, all the fools yesterday was talking about, oh, oil is an investment. Oh, but what happened? Today oil went red. Oh, what happened? Like, y'all don't want to talk about it now? Not now, y'all don't want to talk about oil, right? Okay, that's what I thought. But oil, everything oil did was a retest for new highs. Exxon always gives the gains. Every day Exxon gaps up, it gives the gains, and then comes back like nothing happened. This is like regular Exxon. Like, Exxon is not to be day traded daily. That's more like a long-term position. All right, so now we got Oklo, another one to watch out for, guys. CRM. CRM, this is a stock I've been watching for a year now. A year. So my theory was, this was my theory, right? Let me delete this trend. I can leave it. All right, so let's look at the level, right? So this candle did not exist. Back when it didn't close. Back when I spotted CRM, this candle was down, right? And I said, I'm like, is it really down? And my students are here to testify that I said this. I'm like, is it really down? Because I seen Apple do this move before, and I'm like, I seen Apple fake it, come back, and create a new breakout. So I'm like, all right, let me look to the left. Like, is this bearish or bullish? To the left is 1, 2, 3, 4, 4 years of breakout. They gave you a breakout, and that's it. That's all you got, and they're gonna get obliterated. Is this a bad company? CRM? Is this some penny stock? No, it's a good company, right? I'm like, all right, all right. So what I was watching for the year, my theory was that the buyers will rescue CRM to make it close above. Think about what just happened with Oklo, that these people try to fake out the drop. They picked it up by pennies, and then they went back to business, right? So right now, CRM is extended because I caught CRM from the floor. But not from this floor, from this floor, right? From the floor. So now it's a little tired. So alerts will be, here, you see I have alert? Alerts will be CRM above 260.41. She goes back to business, and we open the range. As long as we hold above 260 every time, we open 336, believe it or not. Should I even add Oracle today? Nah, that'd be too much juice. Oracle. I have my theory about Oracle. That's the next one that I'm not gonna give you guys the whole info, but just watch out for Oracle. Oracle's the next one that people are gonna be like, oh my god, I missed it, blah blah blah. That's a overnight type of move that's gonna happen in the future months. So yeah, and you see how I had to go to a yearly to get a nice picture, because look at the 2 months, choppy, and look at the monthly. You guys see this bullish engulfing with a 1, 2, 3, 4 months of bullish engulfing with a trend. With y'all see this guy? So why if this guy goes above 260, why wouldn't I be excited? It has the slingshot that we need to retest all these drops that we had, and most likely the drop's gonna be around 299, somewhere around here. So yeah, CRM, she's that girl. We like her. Look at this trend. Look at the perfection. And mind you, we got these levels from the big time frames. Look, perfect. We just right now, price is saying bearish engulfing, but this whole range is just a range. This is not a bearish engulfing. They could even hit that 239 to psych everybody out and make them think like, oh, I was wrong about CRM. But these people will do inverse head and shoulders. Let's link shot back to 60. 260 doesn't come back. All right, that's CRM. That's something that I was proud of waiting for a whole year. Now let's start doing the text. I got good news too. Any questions so far, guys? Any questions? Seems complicated. Don't get it. It sounds you guys are following up with it. Let me know and I'll slow down or repeat whatever I have to. All right, guys. Good news. Anybody who's an AMD investor, if you have options, you have leaps, you have shares. So shares only, not options. You could do, but for the options, you gotta catch some of the retests. Portia said, do you also use indicators? Yes, the RSI is my bread and butter. Out of every indicator is the RSI, because with the RSI I'm able to see the divergence. And there's one, is this one, the RSI divergence indicator is free on TradingView, is free. But the problem with this indicator, it lags. So you're gonna have to spot the divergence with your own eyes, and then it's gonna, once the move already like triggers the divergence, then it's gonna say bullish divergence triggered. I'm gonna show you guys an example later. All right, my AMD peoples. This is something I've been doing for, the way we call AMD, guys. I don't know if you guys see me like when I be catching AMD. It's like savage, like every penny juice out of AMD. So AMD will be hitting, where are we? 250 to, we are 190, 250, 300. AMD is gonna go 300. Okay, let's use common sense and let's look at the chart, right? So we know that AI, we know about NVIDIA. But you have to pay attention about the money, the Saudis. The Saudis got that unlimited money that we don't even know about, right? They got their hands on AMD. Trump got his whole deal going on with AMD. All right, so AMD is that stock, that the next one up, right? Because NVIDIA is already, NVIDIA is a lot going on. And they like to diversify. And also homework for you guys. You guys got to find out about Saudis. What Saudis are doing right now, they are diversifying their own portfolio, going into different branches of investments, which is media, chips, and other things, because they don't want to be too reliant on oil. They learned a lesson from the past that if something happens with oil, they don't do too good, right? So now they've been diversified and they got the money. All right, AMD. We just had the yearly candle close above 147.74. And slingshot, right? 1, 2, 3, 4. 4 years of consolidation shows 144. So what does that mean, right? Right now you guys see the market's a little extended, it's a little shaky. If it has bearish divergence, no problem. Let the market come to the floor. If you guys, that's none of your business. Y'all set alerts. Y'all ever see AMD 147, buy and don't ever ask me a question. It's just buy and don't open it again. Because what they will do will be like breakout retest, thank you, goodbye. Even if they break it by a little, they'll pick it up. This 147, this is the, think of it like you're about to go into a fight, right? It's a war. This is your buddies. You're going to come back. You're like, help, help, help. They're about to beat me up. Come back, come back, come back. Like, oh, I got backup. Let's go back up, right? Let's go beat up the person who pushed me down. This is the backup. A big backup, right? All right, so that's all you have to know for Mr. AMD. Still breakouts. Let me see. I'm not gonna go too much in detail with AMD because that's more like, that's more for like my regular class. But AMD right now is holding the breakout. Anything past 197, AMD is good. Anything under 197, AMD goes to 147. That's it. Pretty simple. No need of very small levels. That's what the math is saying for AMD. And pretty clean, because if you go to small time frames, look how, now that we made this levels in the the big time frames, look how clean it is. Perfection. Clean. Perfection. All right, that is Mr. AMD. Next one that I am obsessed with is Amazon. So I took Google to all-time highs when people didn't think Google was going to go there. So Mr. Amazon, Amazon lags. Amazon and Google, the ones that have the strongest correlation on how they move. Apple does its own thing. Tesla does its thing. These two, eventually one of them is going to catch up, right? Richard said, I think she's going to 300. 300 to, yeah, 300. 255, because the buyers like the round numbers. The banks, they're not looking for 293. No. They're looking for round numbers. The 250s, 275s, 300s. Once they get there, liquidity sweep. All right, so let's see what Amazon, right? Let's see what Amazon is doing. Mind you, I don't got all my levels. Right now, I got the big levels. So what matters for Amazon? All right. So On the prior years, Amazon closed as a 1, 2, 3, 4. Okay, this is an example of AMD, what I'm telling you guys about AMD, right? It closed with a 4-year breakout. They did the breakout, and last year, what did they do? They destroyed Amazon to retest the flag, and boom, goodbye. And that is exactly how I called up Amazon from the floor and took it to the sky. Cause I'm like, all right, so I'm like, this kind of a fair thing. If they drop it, no problem, drop it. And I shorted Amazon, I think, to the ground, and I also took Amazon to the top. Due to this guy, I knew I couldn't short past this. I'm like, I can't. I'd be crazy to short a freaking try to fight against this guy. I'm like, no, I don't got that type of money. I don't got $2 billion to move this stock to bearish and gold. I'd be crazy to do puts, continuing puts, right? All right, so now we are here, 219. That's what matters. The yearly close as a continuous breakout. So the area for us to protect will be Amazon above 219.36. The buyers will continue to try to pull this stock up and to do the breakout. The key number is 219, so let's set an alert. If we ever lose that, yeah, we're wrong and we're going to go retest this frame chicken, right? But as long as 219 holds, we good. So now let's start going to more time frames. 6 months, same setup. We cannot lose this. Nasty puts go under that, but so far we're good. 4 months, you guys can see the ongoing breakout. 2 months. Okay, now we got little candles. That was I think Portia asked me about how do I get the levels. No, it was Elaine, I think. One of my ladies asked that question, right? So now the levels, let me see. I know we're bouncing from this area, the 219, and we're doing a whole lot of inside moves. If we're able to clear 233, you get 244. If you clear 244, you go to 255, and we get nothing higher than that. Let's go to the, look how beautiful, guys. Look at price. Perfect. Look at the weekly. You're going to pull your hairs. Look at the weekly. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 is doing inside moves. And I tell my students, I'm like, guys, don't get too discouraged with Amazon. I'm like, it's red, green, red, green. I understand that. But the reason it's doing that is because in the range. The big move, it happens if you break down from here, bear flag, destruction. If you get past here, you're going to get to minimum 244. So right now it's a waiting game. We are right there. We are literally in a waiting game. Look how clean this is. If you clean this, you go there. Elaine say I'm in main course for Amazon. Yeah, if this breaks, you're solid. And this becomes also that if price gets out of here, this becomes your retest zone, your stop loss, your danger zone. As long as you get past here, let them come back, no problem. More calls. And to 244, right? So that's Mr. Amazon. Mr. Amazon is looking very good. Let's go now to, I have so many of the stocks, guys. I have like a list of 100 stocks, I would say. But I'm going to go to what I could remember recently, what I've covered. These are stocks that I covered in class. So I'm the one, okay, Hims, okay. I don't know, it's just the knowing. Like, I'm telling you, this little dance that it starts doing, I'm like, I know you. I know when you start dancing like this, I know what's up. Remember what I told you guys about when it starts doing this? It got up already? Oh, shit. Well, I'm in cold, so period. Let's make a friend. All right, so now how do I catch them at the bottom of the barrel, guys? This is the same case of Oklo. This is the same thing as Oklo, right? As long as I'm like, what's the worst that can happen? I mentioned at the bottom of the barrel. All right, let's go to, let me see, the yearly. Yearly Hims broke out from here. As long as we hold above 32.56, we are good. You guys are good. I don't follow up with news. I don't follow up with overnight activity unless you tell me to. I don't follow up with nothing. I just show up and I'm like, oh, it's above this level or under this level, and that's what I do. All right. So now let's see this guy. Hims is inside this area, right? Let me look at Hims. The 2. Hims is in a range. All right. Let me look at the 4 months. Why did I mark it? All right, so I went ahead and marked under the this candle right here because anything under 32 is no good. You're going back to the 24 area, right? So I said as long as we hold above this one, it's still, I'm not saying Hims going to go to some highs, but this is a good retest zone. Like this could retest maybe for the next drop. And I could profit from the pulse on this side. So 32.56. All right, let's go to the monthly. On the monthly, I'm dancing here. My enemy right now becomes the past price, which is 39.77. from the bounce that we are, what price is it gapped up? The most we could go to 39. After 39, they're gonna give it a hard time. All right, so now we know this is the enemy, 39.44. Let's go to the weekly. All right, in the weekly, we could start seeing the little dance, right? Remember the little dance that starts doing that? It starts hitting the trend, coming down, trying to pick itself back up. So then on the weekly, I go for the last price, right? The last low I'm seeing is this one, the 34.71. It's a little over 35 as of now. Bet. So now we enter in this category, right? So as long as we hold above here, what do we have to retest? 39. And I will actually mark this as a red zone. Somewhere between this little gap to there, a rejection can happen anywhere in there. So I'm going to mark that in red. That way when I'm trading where market hours, I'm like, okay, I'm in calls. I'm like, take my money. Or also when I'm in calls, I'm like trying to catch a calls. I mark that area green, right? So green and red is only a range. It's just, look how easy, how much easier it looks without 1 billion lines. All right, let's look at the daily. Do we have divergence? Let me see. Yep, divergence confirmed again. This price is lower than this. Look at the RSI. This one's lower and this one's higher. Divergence is there. By no coincidence, the news, that's what I'm saying, the setup is always there. The news helps it accelerates the move, right? So yeah, look. Okay, if you buy shares, right, it's at 34, 32, that's it. You buy shares, if you lose 32, you're wrong, no problem. You done like 10%, couple bucks. If you're correct, let's go. After here, they're gonna give it a hard time. I'm gonna tell you this. They're gonna do like Amazon. Once it gets here, look, let me. This is how stocks move. Like this guy will do a fast accelerated move because of divergence, and then it's gonna make you think it's gonna, and then it comes back, and it's gonna do a whole lot of this, and you're gonna cry. It's gonna end up creating a flag until it gets ready to break it and then do the next move. How far do you go for options, right? It all depends on, to my left side, how big is the candle, right? If I'm doing XM, you guys saw it's a multi-year breakout. I don't know if you guys saw when I posted my gains. I have all the way to 2027. And those 2027s, I grabbed them in 2025. So it all depends on the big move, right? So because I know that if I'm only trying to catch from here to here, 39, I wouldn't do weeklies. I'd be careful with weeklies because they will lose a lot of money. I would do probably like a month, no more than a month. I do like a month. If you wanna guard your capital 2 months because you're trying to look for a quick move. And you could also do some, since you're at the bottom of the barrel, you could also start here a half a year play. Because if you're correct and get past 39, you're gonna go to 49, right? So you wanna allow this to have time. So the way I would do, the state that you're holding that long, nope, it does not. The longer you are with expiration, like we're talking about like 6 months, and then you start hitting the months, the data does not tag you that fast. Is the weeklies that one run a retest. Meanwhile, if it retests and the stock's still bullish, you're gonna be down at 50% in the retest. So that's why I'm very careful with the weeklies. Unless I know and I'm thirsty in a play like an Oclo, I'm like, it's gonna go for sure, then I'll do something like that. But majority of the times, and you guys see my Oclo, I have weeklies, and I also have Oclo all the way to a year out. I have Oclo for 6 months out, right? So I don't just do one position. I scatter myself, right? Because I'm at the bottom of the barrel. It will be, do you buy the money? Hell no. I do not buy the money. Why? The reason I don't, in a second. The reason I don't do at the money is because you're able to buy less, right? You pay a very high premium, and everything's psychological in the market. Because such a high premium, you wouldn't be able to hold, right? If you're up 100% and you pay, let's say, $5,000, you see 5,000, you're gonna want to take it. Compared to you, let's say it's worth 5,000 and you're going with, let's say 200. You pay something out the money, and I mean, we could talk about. They're trying to juice a lot of me. They're trying to get the whole info. All right, so pretty much, I will let's say in the money costs $1,000. Let's be more realistic, right? And then I'm like, all right, so that's a year out or 6 months out. I'm gonna grab the 200 contracts, $200 contracts. That way, I'm able to grab 5 if I was willing to spend 1,000 already. And that way, as prices going up, for example, I know that I'm gonna struggle 39. So if I like my money at there, take my profits and leave some runners. If I have 5, I could take 2. And I leave 3 to run. And 3 are gonna get smacked around, but I already took my money. Then the next one's gonna start going in here. I take another one when it goes in here. The last 2, I take them here. I take one more, and then the last one that is like the one that I'm like, let it go to the moon to shit. I really don't care. Then that was the one that's capable of going to like all-time highs. But you have to diversify your risk. You gotta play with your psychology so you don't get greedy or you don't get scared. Because either once you see the money, the law, a big loss, or big, you're gonna be, trust me, psychology kicks in. And when it comes to choosing those contracts, you cannot jump into any contract without the money. You have to look at the volume and open interest. It has to be it has to have a decent number. What's a decent number? I don't know. You guys gonna have to join class to understand what's a decent number, right? But that's for y'all to do your research. So that's an idea of how to enter. Like I said, you wanna different expirations, and take it as you go. You enjoying the ride. Like I said, you enter at the bottom of the barrel. There's not much that could happen. Thank you. All right, so that is Mr. Hims. Let's go to Oscar. Oscar did that thing today. And mind you, these are all stocks that I covered on Friday. I was like, guys, my spider senses said, I don't, and I told my students on November, it was in November, because I traded in November many other years before, I know that November, they take my gains back. If you had an amazing rally, in November, they start chopping up and down. Your options start losing premium, your datas, and then your shares are gonna go down. But I don't know what happens in the market, but in November, it's horrible. Even me and Rich, one of my students, that's like, we like close, he's here. On November, we said we out of tech. We started going on a selling spree, and I'm not saying that it's bearish, but I'm selling at the top, and I re-enter to stocks at the retest. Or if I do options, it's gonna be like I'm gonna catch them at a better price. I don't wanna. Yeah, we gotta protect the gains, right? Everything's about risk. Manage your risk and protect your gains. All right. So I did that in November already, and I was already looking for what else. I'm like, all right. So I'm like tech is at all-time highs. Meanwhile, there's other stocks that they're not bad stocks that they beat down. So I did what I know how to do. I started hunting from the beat up ones, and here we are. And they all got the same setup. All right. So let's look at Oscar. Why did Oscar run to the moon today? Let's see. I don't think the yearly tells me much. Let me see. The yearly is not telling me much. The yearly is just telling me bullish engulfing continuation. It's not telling me much. Let me see. How did I find? The thing is that I've been in UNH. In UNH, I went to look for Hims. In Hims, I said Hims. Okay, Oscar too. All right. So now Mr. Oscar is doing a flag. Why is it doing a flag? Look to the left. Price has a reason why it behaves the way it does. It doesn't just start consolidating just because it's tired. No, it usually starts consolidating when there's a big obstacle to your left side. This guy, we need all the power in the world to beat up 22 and open this range 36 to 22, right? We need the slingshot. Pull, get out. All right, so let's keep going to the 2 months. All right, now it looks a little clear, right? Inside moves with the enemy right on top of us. That's the first one. Look how many times rejection. Even when this look bullish, rejection. All right, so now here we are. That's what I'm saying. When you see that bullish candle, that's not guarantee you're gonna break out. Because what they'll do, they'll retest you to the floor, and then they will do the breakout. This buyer, they're not nice. All right, so let's go to the monthly. All right, in the monthly, I only have. You guys see again. Look at the red candle. Look. They're very sneaky. Sometimes you got to bring your magnifying glass to see, is it really bearish engulfing? Even if it will be bearish engulfing, you're like, is it bearish engulfing in a range? Or is it bearish engulfing like breaking a key level type of, All right, for this one, we have this inside candle, 1, 2, 3. Price fell down from here. So now our job is to retest from the bottom to the top. The 13.99 is coming from the bottom of this candle. I couldn't pull a little bit lower, right? It's coming from this candle right here. That's why I went ahead and marked this from here to here in green. That's my bouncing area. It might not be to a penny, but I knew somewhere in here it's where Ribbon, I'm not doing additional stocks because I already did a lot of stocks right here. I will be making class a little longer. But apply the same way I'm doing it. Go to the yearly, go to the months, and so on. Last thing I'm aware is that Ribbon broke like a multi-breakout. So take a look at that. All right, so with Oscar right now we enter this category. We got the bounce from here to here. That's why when I said like, oh, Oscar's gonna bounce, like this is the bottom minimum, we could get 16. Look at 16.13. Now we're inside of it. So what does that mean? We're opening range to 18.93. And then if you get past 18, you go to 21. At 21, I don't know what's gonna happen because I cannot assume a break of range. If they do it, then fuck it. You open up here, bear flag, beat up the bear flag, go to 26, go to 35. And when it comes to Oscar and all these companies, start using common sense. All right, this is healthcare. If people get healthier, healthcare is gonna be there. If people get sicker, healthcare is gonna be there, right? So go back to Stargate project. What did Trump say? Trump said he's going to use AI for healthcare, right? So it's this, and then Oscar and Hims are kind of already on the AI side already. Not much of UNH, but they're the ones that are gonna benefit. Right now, the way that consumer behavior is going, they're heading more to things that they want answers faster. They want access to easier to navigate without having to call your rep, without having to call United. They want to be able to go online, file the claim, approve, deny, submit documents online. Like Lemonade, there you go. That's where the technology is heading for. Convenience. So if this guy's beat up, like what does it make it a bad investment because it's in the bottom of the range? No, it tells me take it, send to the bottom. If you're wrong, you lose $1. If you're correct, you're gonna double the price. So risk to reward. Like I said, you guys can get an idea of what stocks I like. I like them beat up when my risk is close to none. All right, and that's Oscar. That's Oscar. If y'all want the whole TA for this, y'all could join class. I'm not gonna do all that. All right, so we have Oscar. Now UPS. All right, another common sense, right? Like aside from the chart is looking juicy. Look at the chart. Look, and it goes on, right? So let's talk about UPS, right? So the world, along with AI, along with the world shifting toward online, and think about Amazon, right? Everything is online. Everything's online, and you could buy 1 billion things, but you're not going to the warehouse to pick up the items. You get them delivered to you. Yes, in the future, there'll be drones, robots, so on and so forth, but you still need the mail to deliver your stuff, right? UPS is not gonna go nowhere. Maybe it gets less business in the future, but it's not gonna go nowhere. So why a company that deals with delivering your retail, and the economy is heading, the retail shopping is heading more to online retail rather than in person, why would it be at 73 and that'd be okay? Why would it be there? And look, okay, so now let's go to the juicy part. Let's go to why I'm like, it's time. All right. So now with this UPS, I did the same thing. I'm looking for flags. I'm like, all right, this one's beat down. Where is it going to bounce? I'm going to look for flags. Look to the left side. All right, this flag failed. This could have been a bouncing area. Failed. Next flag is here. I'm like, gonna grab that, highlight it in this, and I'm going to mark the 85 all the way to 73. Somewhere in here has to bounce, and look where it went. And bounce, right? Cool. No problem. 6 months. We're entering this candle we fell off from. So that means that maximum reaches we could do will be 118. We cannot assume nothing higher than that. 118. If we get past 118, yeah. Let's look at, there we go. 4 months bullish engulfing, showing up above the flag. So that's a good thing to see. Let's look at anything I'm telling you guys. Consider it like shares, right? Let's go to a less risky side. Options. That's my class. We do all that other crazy stuff. Let's talk about shares. Okay. Let me see. So now UPS right here, look, that little dance they started doing right here, they started cluttering, doing a new low and picking itself back. Yeah, right here. Not only that, this guy is doing this inverse head and shoulder needs to be created because you have a big enemy right here, the 118. Now let's start going to the monthly. Look at the monthly. Alex said, oddly, UPS has equal lows 3 times. Wonder if Q closes bearish. They perch low. I'm not sure, but right now we're trying to catch a retest from 85 to 118. At 118 right here, they're gonna slap it down. They're gonna slap it down to this range right here. quarterly 3. Yeah, we have couple time to go through there. So far, we're gonna play with this range. Let's see. All right, so now we're in the monthly, right? Look at the monthly right here, 118. Okay, now we're at 118. 118 aligns with a bear flag, and right now we are getting past the inverse head and shoulders and above this guy, right? So our enemy right now that we have to hold above is a 100. We could go for 110 somewhere in this zone. Even if we hit the 118, it's gonna have a hard time because this bear flag and these two are gonna make slap it down. When it slaps down, because you broke this range, it's gonna do some move similar to all of this, somewhere in there to grasp momentum. To, like Alex said, either we dump. If you break 100, you're back to 85. If you break above 118, you open the breakout of the bear flags, the trend, the monthly, and goodbye Earth, right? It's gonna start creating a base. All right, so that is Mr. UPS. Like I said, this is one setting up from the bottom. I'm already UPS is the bottom of the barrel. I've been UPS is here, but now we're here, right? And I'm sharing. The next one will be Adobe. I think this one's good. This one is on some what's the worst that could happen. Exactly, like Jimmy said, Alex is possible, but since method is level based, the levels will guide you and warn you if the possibility. 100%. Like look, this tells you good binary, and this one says danger, danger, danger. If you break here, fuck it, it's done. If it goes past here, you're like, oh. And also with the levels, I'll tell you this, Alex. Prior, when I didn't know much about this, I was very biased. I used to think like common sense. I'm like, oh, but this will make this person announcing this or this law would make it do this, and the market would do the opposite. I learned my lesson when I got obliterated from the market. Once, when Ukraine and Russia went to war, I remember I had puts overnight, and I woke up, my puts were like 1,000%. I was like, yay, it's gonna go lower, right? My common sense, I'm like, everybody's scared. This is war. And then I was in puts, and I didn't sell my puts being greedy, because you see I'm like, oh, this no levels, just straight up thinking I know better. The market did the biggest rally. You guys remember after Russia, it rallied like no tomorrow. And then my puts that were heavily up went to crap. And then I said, oh, hells no. I said, oh, hells no, right? So that's why I use, although let's say in theory, let's say I'm bearish. Let's say I'm Adobe, I'm bearish, right? If I'm bearish on Adobe and I see Adobe reclaim this bottom and do this bullish engulfing, I'm not going to fight it. I'm like, all right, I might be bearish on Adobe, but if this one goes here, this thing is going to retest to 446. You know, like, I'm not going to fight it. And I've done that. Trust me, there's many times I've been bearish on the stock. And then I'm like, guys, wait. It's actually bullish. Get out those puts. Puts no good under this level. You know, it was a fake out. But it happens. It happens, like I said. But like I said, the levels have helped me a lot to not become too biased or think I know more than the market. I respect the levels. If the level goes above it, I'm wrong. And I'm like, fuck it, I'm wrong. I don't know more than the banks. I don't know more than markets. I'll be wrong. That's fine. All right, Mr. Adobe. This one's a goodie but oldie. Let's see, Mr. Adobe. This is the setups I'd be like, all right? So in theory, right, Adobe's at the bottom of the barrel. What could go wrong, right? It's a 331. Do I trade metals? I trade whatever. I trade anything. I'm not. If I could trade cows in Robinhood, I would trade cows. I don't care. I say Prince. All right, when it comes to Adobe, Adobe's an example of risk to reward, right? We are 331. So if I buy, let's say I buy, right? And then I'm wrong. It falls on $2. I'm wrong. I'm gonna be down like what, 5%, no problem. But let's say that if I'm correct and this is the bottom and it bounces, that's it. I bought it, bottom of the barrel. What's the worst that can happen? Nothing, right? So this stock is a bearish because it has a bearish engulfing? Maybe. I don't know. None of these have a bearish engulf though. And price has not gone under, so it's just there. So now we see Adobe. Now let's keep going to the 6 months. Mind you guys, I'm giving you guys a lot. All my stocks that have rotations, my beat up stocks that I be watching, y'all getting a lot. And I got a little too that's a part of this free classes. I don't like to do them too much, because I start talking a little too much. I start spilling all the beans. Because I mean, I love the stock market. It's hard to look at it and be like, and I tell you guys, like, you know, It is what it is. All right, Adobe, right? So now we have the yearly level, and then now we have this level right here, which is the 376.70. So that's a month. That's a 4 month. So you see how I started the range. I went ahead and highlighted. Cool. Now we have the 2 months. All right. Again, the little dance. Remember the little dances are doing little dance. All right. We here. And look, they're making you think that this is low, but look at this bullish engulfing, cause this setup. So technically, if we bounce from here, this is the same setup, same. All right, let's get more. All right, here we go. The monthly, you can see the clean picture. The guy we're fighting with right now is the bear flag at 376, right? This is what destroyed it, made it come here. Cool. To a left side, we could see the clean level. To the left side, this is like a flag. All right, and then we have a bullish engulfing. And now we have price going red, right? So is this bearish, is this bullish? As long as this guy holds, as long as I don't take this guy out and then this one closes under, this can even go under. And that means nothing. If this guy will go under, set alerts when this guy reclaims this range and it was a fake out. And you back into thinking that it's bullish, right? Yes, I do use SPY and QQ overall. 100% I use them. I use them as a, you guys see how I did a Bitcoin? That because I don't trade Bitcoin, I use it as an indicator of what to expect for coin MSTR. Similar scenario, I only touch the ETFs when a big move is gonna come, and I'm gonna obliterate that move. That's the only time I touch. I don't really like to touch the ETFs for like up and down inside moves. I hate that. A lot of you guys are amazing at that, but me, I can't. I'll go somewhere else. I start switching sectors. All right, so the enemy is 376. Cool. We got the bullish engulfing. Let's look at the weekly. Nothing. Look at this. Bullish divergence, bullish divergence, bullish divergence. And it's in a range. So this means nothing. Let's say that this is the range you're in. Like Carl said, he's in calls. This is headaches. This is the risky one, right? If you want to be risky, take it here. What's the worst that could happen, right? But if you want more like a peace of mind and you get scared a little faster, just wait for 376. You break the range, and then they're gonna go ting. Somehow, some way you get to 46. 46 is going to be danger zone. Danger. Why? Because danger, right? So we could go here, no problem. Oh, look, it's going to come flat on here, actually. We could go there, somewhere here, right? That's a big move. We're talking about $110 move. It looks like nothing because this is a big time frame, but that's a big move. All right, guys, I gave you guys way too much sauce. All right, thank you for joining class. Like I said, I don't do this often, so thank you. Over 30 people joined. I hope you guys were able to learn new knowledge. Let me see. I hope you guys were able to learn new knowledge. And yeah, to understand that this market, it is complicated. I'm not gonna say it's not, but the bigger time frames you're able to look at, the more clarity you have in the market, because it's all about psychology. You need to know yourself. Don't, oh, cause Cynthia trades like that, I gotta trade. No. It's you. How do you respond when the market's beat down and you still holding puts? I know myself. I'm like, oh hells no. Let me go somewhere else, right? Let me go short something that's extended to the top at all-time highs. Let me go for that, right? So understand how you like to trade. Use a time frame to give you more clarity. And I always tell you guys, like, your job in this market is to save the money, save capital, because the setup, your job is to survive in the market. You want to be here as much as you can, because a setup will always show up. And if you blow your money on a chop zone, you're not gonna have money when the good setup comes in, right? So save your money, stack up, and then use it when it's ready. Use your alerts to help you, navigate the market. And if you like this and you want to join the class, I follow up on the market every single day. I'm a 24/7 type of girl. On the weekends, as we do a plan to attack the market. We go with a list, same way we did, but obviously smaller time frames. I plan exactly what the stock is going to do, and then Monday through Friday we execute on what we're seeing above this line. Guys, set alerts. This is what's gonna happen. This all the good stuff, right? So it gets more detailed, as you guys seen every day. If you guys want to sign up, my Patreon is on the top of my page. I'll post it again in my stories if you guys would like to sign up. Any questions you guys have, you guys can see I am an open book. I talk a little too much, all right? All right, so let's read the comments. What the people got to say. Jimmy says, sign up for Sin's class. You will view the market completely different, pure PA. There we go. Jimmy is my student right there. iPhone said, eye opener, going to back test. Yes, oh my God, back test. Back test. Carl says she's the GOAT. Thank you, thank you. Tony said, thank you, Cynthia. Richard said, Queen of the Charge. She takes you from Ashley to Classic. Period. iPhone said, I'm liking Boom. Thank you, thank you, thank you, superb. Thank you, Cynthia, 2026. Thank you guys for joining. Like I said, in this market, it could be lonely. It don't have to be. As long as you get a group of people who think like you, on the good days they're on your side, on the bad days they're on your side too. It's you can make the market a little less lonely, a little less stressful because trading by yourself. And I would say, like, I always do this class with my students because they motivate me to show up on a good and a bad day. Sometimes if it were to me, I'd be like, yeah, I'm not, I don't feel like waking up today. But I've shown up to a market. I've never taken a day off, except for the day I had surgery. I think. No, I had surgery in a weekend. No, honestly, I show up every single day. I probably took one day off because of holidays. But aside from that, guys, I'll be here every day. The market is my happy place, the place that I get to talk to all of you guys. And yeah, the market is my happy place, guys. Let's get this money. Like I said, the time frames and control those emotional thoughts. Don't let the market play with your head. Follow the money. Think like a bank. Emotions. I like, I don't like, I dislike. They don't care. Unless you got billions of dollars, the market does not care who you voted for, what are your beliefs, what you think. The market care. Think about what JP Morgan would do. Would JP Morgan buy this? Will BlackRock like this? Are they thinking about what they? No, they don't care. They're like, oh, good level, buy here, buy, sell. Like, think like a bank, okay? And when you think about beat up stocks, think of Warren Buffett. I love that guy. When I see them beat up, I put a Warren face. I'm like, oh, Grandpa taught me well. I'm about to buy this beat up once. Portia said, biggest lesson of 2025 for me was take the emotions out. 100% Portia. That's the one. Emotions, like I said, emotions good for your personal life. You have to be an emotional person. It's just who we are. But with the market, do not bring those emotions here. Be very robotic. Be very like motionless, fearless. Yeah. And when you start seeing things on more like risk to reward, it's gonna help your emotions. Like I said, something like this is like, oh, what's the worst that could happen? You're not scared doing calls. Versus you doing calls here, you're gonna be scared. So don't put yourself in these predicaments. Put yourself in something that you're comfortable with trading. All right, guys, have an amazing night. Thank you for joining class. Like I said, maybe I'll see some of you guys on the next class or whatever the case is. Bye-bye. Stop the share.